But first, all major averages are finishing in the green, the Dow ending higher for the fourth straight day. Our next guest says there have been some bullish trends forming in the market during the most recent volatile period, and those trends could mean there's more upside ahead. So joining us now is Bespoke Investment Group co-founder Paul Hickey. Paul, it's great to have you back on, and let's start right there. What are you seeing, and why does it feel constructive?
Well, so two things. You touched on it on the top. NVIDIA, for the last year, NVIDIA has made a habit of rallying and then on good news and then capping off that rally with an intraday sell-off and declining. It's done that multiple times over its last few earnings reports. It looked like we were seeing that after last week's earnings report, but the stock, it was a one-day reversal, and then it stabilized, and now I think today it closed higher than it did last week. So the fact that NVIDIA hasn't really seen that selling into good news, I think, is a positive sign for the stock and for the AI trade and the semis in general. The semis broke their downtrend that's been in place all year today. And it wasn't just NVIDIA driving that rally. When I last looked, the only stock in the SOX that was down was ASML, and every other stock was up over 1% on the day. So it was broad-based strength in the semis today, and that's a good leading indicator for the economy and the market.
S&P, it looks like finishing 59.70, up about 0.5%. We still continue to be pretty range-bound here. Is that to be expected, given all the volatility we've seen so far? And if so, what's the next catalyst?
Yeah, well, so for the last couple of weeks, we've been sort of just treading water here. But, that's typical when you see this big, sharp rally like we saw off the lows and you get back to close to those new highs. It's not uncommon to see a period of short-term hesitation where, the market, and investors just reassess things. But historically, what you've seen is within the next couple of weeks in these prior periods, when you've seen a similar type rebound, the market was at new highs. So it didn't usually take long for the market to take out that prior high, which I think is encouraging. And then within the day, it's a tale of two markets that we're seeing here. What you've seen so far this year is at the open, the SPY, which is the ETF for the S&P 500, has been gapping down about an average of over 6 basis points per day. Doesn't sound like much, but the only year that was worse since 1993 was 2008. And then 2022 was a year that was similarly as bad. Those were terrible years for the market. That's the bad news. The good news is, as in those years, the market kept going down from the open to close. This year, we're on pace for one of the strongest years where you see the market performance from the open to close. So while there's been selling at the open after some overnight negative news, there's been eager buyers stepping in during the trading day to, get those lower prices and add exposure.
We got CrowdStrike about to report any moment now, and this is a big cybersecurity stock. A lot of the cyber names in the ETFs have been at or near record highs. It's expensive, but should you buy it here? How are you treating these names given the environment we're in?
So right before it's about to report earnings, I probably wouldn't step into a stock. I never like to do that right ahead of earnings. But I mean, the momentum in these names, it's crazy expensive. But when you look at the fact that it's expected to grow earnings 30% out per year out until 2030 and revenues by 25% out until 2030, I mean, the growth is there. And so investors have been willing to pay up for that growth, with these other software names. And CrowdStrike is just nuts as far as its performance this year. It's up, like you said, 40%, and that includes a period when it had a 33% peak to trough decline in the spring. So it's a very volatile name, but investors have been willing to pay up for these stocks that can show strong growth.